What's going on, everybody? If you thought Roy looks a little bit different today, it's because it's TJ instead of Roy. Uh, because we're going to talk about wheeling.
Fat and dumb, bro. Bald, fat, and dumb. Things are going down here for Roy right now.
And rich. You can't forget that.
I think you'd rather have a full head of hair, smarter and better looking. So I don't know.
I know a lot of people who would have a couple $1 million in the bank, but we can agree to disagree. We're going to talk about.
Dude, we have an announcement to make.
Yeah.
You're not a virgin anymore, Tevis.
I know.
After all these years, bro, you finally found the one. Walk us through it. You popped your covered call proverbial cherry.
I finally, at 30 years old, this ripe old age, I popped my covered call cherry and sold some covered calls on Tesla today. The first day that my broker allowed it, funny enough, they don't allow cash secured puts, but I did sell covered calls. So I'll walk you through what I sold.
Sure.
I don't have anything to show you guys, but basically I sold covered calls on Tesla expiring on October 25th at the 260 and 265 strike, like uber conservative, got like $250, nothing crazy. I sold 3 of those. So one at 265 and then 2 at 260. And then I want to do some
more. Up on Robinhood so that I can look at the Greeks and all that, and we can use it as like a teaching moment.
Yeah.
So you got covered calls for 1025 and you're at what, 260, 265? Is that what you're saying?
260, 265, yeah.
So right now that's a 7 delta, Jesus. And then this is like the equivalent of having sex with your clothes on. And then you have
yes, exactly.
And then at the 265, that's like doing it over the phone. You know what I mean? I don't even think you're qualified to be in the same room right now.
Yeah, but first base. That's where we're starting off.
So anyway, let's show the screen so we can show people how conservative this is and walk through the dynamics of this situation. So essentially what Tevis did, guys, for those of y'all that might not be familiar, a covered call is essentially when you own 100 shares of a stock and you make an agreement with Mr. Market saying, hey, I've got these shares for sale. I'm willing to sell them to you on a certain day at a certain price. If you will pay me some money up front in the form of premium, I will essentially collateralize my shares, putting them in escrow, if you will. Pay me some money up front, and one of two things is going to happen. Either the shares are going to be trading above my strike price at expiry, or they're going to be trading below my strike price at expiry. So walk us through it. Why did you pick 260 and 265? And then we'll look at the Greeks and stuff and see exactly how conservative you were.
Yeah, I didn't look at any of that stuff. I just picked a price that I thought never in a million years would hit. And even if it did hit, I would be pretty happy with it. It was like 20% out from where it was trading right now. And so I thought, okay, 20% in 10 days. Tesla is a very volatile stock. There could be news that comes out. Who knows? That could really take us close to there. But again, I'm super uber conservative the first time around. I don't want to get these shares called away. As I go on, I think that I'm going to be more scientific about it and probably play a little bit. I was thinking about like 250s because I was like, oh man, like it's not really worth it for me to do 260s. But then I was like, you know what? It's your first time doing it. Like, let's just keep it super safe.
Yeah, because the big thing here is when you're just getting into this game, you want to set it and forget it, and you don't even have to manage it because you're okay with the result either way. Because I feel like mentally, psychologically, you're like, I don't really want to sell the shares. But if right here, right now, everything that we know about Tesla, you're willing to give me $260 or $265 for 100 shares and paid me money on top of that, that wouldn't be the worst thing in the world for you right now. You could free up that capital, potentially redeploy it into Tesla down the road if there's a pullback, or reallocate it somewhere else. Is that kind of what the thought process was at the time in general?
Yeah, that's exactly it.
Gotcha. So now let's look at what are the probabilities, because this is a game of probabilities at the end of the day. So let's start with the 260, because this one's a little closer to the current share price versus the 265. So essentially, the first number that pops to mind is the delta. It's a 7. So essentially, you have about a 7 to 8% chance that you would actually have to relinquish these shares in 10 days. So you're essentially playing in the 93 percentile, 92 to 93 percentile, saying that, hey, this was just a cash grab. Now, what did they pay you in the form of premium? Because right now, that option is going for 78 cents. So essentially about $78 a contract. Do you remember how much premium you received when you did this?
Yeah, I got like so my broker had 75-cent fees per contract.
Okay.
I think mine turned out to be like almost $70 on the 265, and then I got like 177 for two of the 260. So just divide that out.
Mm-hmm. Wow.
Yeah, so like 80 something dollars, $88, 89. Well, I actually have the premium here on the spreadsheet, 89.
So how did you feel emotionally when you did it? Because I know when I sell covered calls, I'm super excited from the standpoint that I get premiums.
Yeah.
But did I immediately have like this sense of, well, I don't want the stock to go parabolic right now either, because I don't want to create like a whole level of stress in my life that didn't exist before for a few bucks.
No, I mean, I don't think I have that level. Like, yeah, I will look at it and I will like I would look at my parlay, like, oh, is it close? Is it far away? Whatnot. But I think if the shares get called away, like mentally, I already made that decision the moment I did it. That's why I chose like the super far out strike price. If it went there or not, it got called away, and we can talk about it, right? Because I don't have the option to do cash secured puts. So, like, what would be an alternative to that? But again, I felt like, honestly, man, I woke up in the morning. It was like 10 a.m. when I did this. Woke up, did this. It felt like the freest money in the world. Like I went, I got a haircut, I did some errands, and I was like, man, somebody just gave me a free $200. This is stupid. How have I not been doing this for the past several years? So it was exciting, I think.
I hear you. Now, you know that you can manage this trade if Tesla were to go parabolic, correct?
Yeah, like I can buy the call back.
You can buy the call back and then sell another call down the road, potentially at a higher strike price down the road, and even collect more premiums through the door if you do it whenever it's optimal. Meaning, like right when Tesla gets to like the 260 range, you'll be like,
Yeah.
hey, you know what? I changed my mind. How much money would you pay me to change my mind? So you don't necessarily have to sell these shares at 260 if you choose to manage the trade. So in other words, you can the limit has already showed you that it has a lot of juice. And if you make a determination that there's a lot of juice left in the limit, meaning you think that the shares can go up and to the right some more, well, why not participate in that, manage that covered call, and then you're like, well, I was excited to sell them you at 260. I'd be like super excited to sell them you at 275 3 months later, as an example.
Well, I have a couple of 100 Tesla shares just lying around. Like, I didn't do it with my full position to start with.
Right.
So there's some flexibility there. And then I think like the mental note that I have to keep with this is like to have cash in the account at all times, not just keep it like a, sub $1,000 balance. Because there is this mania around like, I need to have my cash allocated at all times because for whatever reason, it just feels like it's just sitting there. But with this, it just gives you more optionality. I think just to have a little bit around, just if in case you want to buy it back, in case you want to close it out and roll and do something else. So
I think you're in a good spot, dude. You're in a good spot emotionally to do this. You're in a good spot psychologically to do this. And I think financially, I mean, worst case scenario, you've got an extra $26,000 in your account in
yeah,
cash. And then it's time to go shopping, because now whenever that happens, it's probably been a long time since you had that type of cash position.
yep,
Now the stock market gets kind of fun because it's really, really weird, because you're actually going to be cheering for red days because you can legit go shopping in a pretty big way.
Yeah, I think that's the thing, right? Because the FOMO for me has made me make worse short-term decisions, whereby like if I think something's going to go up in the short term, or like I'm playing short-term things, and to get capital really quickly, like I'll sell a position, like I'll trim half or something, and I'll play around. But with this, like if I can just get called away, then that's fine. Like I'll have a bunch, like I don't have to make desperate decisions just to scrounge up the cash, is what I'm saying.
Right. I like it. I like it. I like it. So what else did you do? Just strictly Tesla today?
I only did Tesla today, just playing around with it. I don't want to mess around with the SoFi just yet.
Yeah, wait till after earnings, bro. Wait till after earnings.
Yeah. Well, I mean, I don't know, man, because I'm doing like shorter time frames, right? I'm not doing monthlies. So we could see a heat up going into earnings, but 1170, I think, is that 52-week high. I think after that point, it would get a lot of price discovery. It would show up on all the scanners. It would show up on everybody's watch lists. It would force a lot of analysts to upgrade, possibly re-rate the stock higher. I think the earnings results that are coming up in a couple of weeks are going to be the glue, if you will, to sustain that move longer term. But yeah, I don't know. With SoFi, it was just the premiums. I would need to sell quite a few options.
Yeah.
I could do that. I have a sizable SoFi position, but I felt with Tesla was just like an easy starting point, you know?
I think it's real good. And I also think, based on having spoken to you numerous times now, and even when we hung out in Vegas a little bit, people may not know this about you because of what you choose to cover on your channel. But I'd say you're a lot more familiar with Tesla than you are SoFi.
Oh yeah.
Like, it's like your knowledge of Tesla is probably twice what it is of SoFi, and you probably have followed the stock a lot longer as well because it's been around a lot longer. Also, it's been a position in your portfolio a lot longer than SoFi has been.
Yeah, about 5 years. And like there was a point in time with Tesla that I was literally every paycheck buying Tesla shares. Actually, fun fact, in 2020, I started doing this thing where every single time I would see a Tesla, like in my commute to and from work, I would buy one share. And very quickly, like halfway through the year, I just couldn't do that anymore because it's just being way too pricey. But yeah, it sort of became like a super habit for me, which is why, Tesla's like 20 something, 25% of my portfolio, something like that, because I was just buying it like week in, week out, week in, week out. Like didn't even look at the price, didn't even look at anything. I would just buy. And I started doing the same thing with SoFi over the past, 2 years mainly, but still Tesla's way larger.
I hear you.
Because a lot of it has run too, SoFi just hasn't run.
So let me pull my Roy impression, okay?
Hold on, we have somebody backstage.
All right. The channel's got a lot better looking and more fit.
What up, man?
For those of y'all that don't know, this is Dallas Matthew. He helps me out on Wheelers. We're supposed to do Wheelers tomorrow, but I was like, let's go on Tevis's channel today because I can't do Wheelers tomorrow and we're going to California. So, Dallas, welcome. Just to catch you up to speed, Tevis is not a virgin anymore. He sold a covered call on Tesla today. But he's kind of still a virgin from the sense that it was 1025, 260, and 265 strikes. So it's like he sold covered calls on paper, but he didn't really sell covered calls.
Right.
Eventually, we'll get more risky. We'll see. We'll move closer and closer to in the money.
Well, yeah, I mean that's a good idea because like a lot of people are speculating like he's saving some fireworks for the earnings call because they didn't really give any say anything about the lower cost model. So if they do talk about that on the earnings call, I think that will help the stock for sure.
Yeah, it's also just one of those stocks with the volatility that it has. It can just run for any given reason on any given day. It's just so unpredictable sometimes. which is cool from a premium perspective. But at the same time, like, again, I'm optimizing what I was saying to TJ. Like, I'm optimizing to not get any shares called away for right now. And then we'll see. Second time around, it might be a little bit riskier.
So were you guys, TJ, I know initially yesterday you had said this was like fix your trade or something like that for SoFi. Did you do something with that today, or are we still going to get into that?
Yeah, I already fixed it, so I'll just walk y'all through what I did in a little bit. But what I wanted to do real quick is, Tevis, can we use your mind? Because I'm sure you're already aware of what the hell's going on with SoFi and this $2 billion underwriting deal with Fortress. I tried, dude, and I want to say the old college tried, like, to where, like, I tried to read real slow a couple of times. Data-driven investing did, Psalm 23 again, trying to, like, Chris trying to give us the breakdown of what exactly happened. Talk to me the way you explained Goodwill to me at that swanky little restaurant at the Aria. Like, what the hell's going on with this $2 billion and SoFi, and why is it pumping so hard off of that news?
Yeah, I mean, I haven't like actually read the $2 billion agreement news. Like, I've seen the headline and I've added it to the list of news for the end of the week for SoFi. I haven't read the specifics on the news. My understanding, again, super high level, was that this is going to really help them on their personal loans side of the business, and lending in general, I think, is one of the big reasons why SoFi hasn't performed as well as it probably should have from a stock perspective in 2024, simply because lending was projected to be down year over year.
Right.
And we're seeing now that might not be the case. It might actually be flat. My prediction all along has been that it's probably going to close single digit, in the green in terms of a growth rate year over year. And so I think this just pushed the market more into that direction of like, okay, well, SoFi, through this partnership, through expanding that loan platform, is actually going to be doing much better than we expected with the lending platform. And since the market sees SoFi predominantly as a lender and a traditional bank, that's going to give a boost to the stock. Again, any deeper than that in terms of the deal itself, I just haven't done my reading.
Mm-hmm. Gotcha. I'm pulling something else up offline, but keep it going. Dallas, do you have anything to add? I don't know how familiar you are with the story with SoFi. I know that you've been a shareholder off and on.
It's not a stock I really follow. I follow the price action, but I don't follow like the updates on the company. I actually just found some $7 leaps in my mom's account that I bought. So that was good, but that's her money. So yeah, I sold all of mine because it just wasn't doing anything, and I didn't have the biggest. I knew I didn't want to make it a massive position, and so for me, I wanted to put those funds into crypto as well as M-Phase. And today, well, I was going to do a video, but I guess I'll just break the news. I had to put my dog down. I had to put a dog down today.
Oh, no, man. I'm sorry about that.
Yeah, this dog, its name was Riot.
Riot? Like the $1 million of crypto miner that I got, Riot?
Riot blockchain. Yep. I had to put it down
We're
today.
talking about a virtual dog here. Okay, got it.
Yeah. So I texted you last night, like I finally got back to break even, and I had a feeling like that we would still get so today was super weird. So Bitcoin started pumping, but the alts were selling off, like Ethereum was selling off. And I get that, like, Bitcoin has periods of dominance. That was really weird to see. Yeah, stick with MSTR for Bitcoin for sure. Actually, the ticker I've really been stalking. Let me pull it up just so I make sure I give the right ticker.
Dude, Travis is big time into Bitcoin, right?
It's my third largest position, yeah.
MST.
Y'all know that I'm officially a
MSTU.
Bitcoiner. Is that what it's called when you have one or no?
A whole coiner.
I'm a whole coiner.
Yeah.
I'm a whole. It's like 1.00001 or something like that.
I just put in the chat. It's MSTU. It's 2x leverage on the MicroStrategy.
Oh hell no.
Dude, that thing goes crazy. Like the other day, Bitcoin was up 5%, and that was up 30% on a 5% move.
It's wild.
Insane. But anyway, yeah. So with Riot, I'm glad I held. I know we have been talking about writing some cover calls on it, but I have a feeling like if you look at the Bitcoin chart, like the 66, 67 range is like it has to like break through it convincingly. Like we have to stop hitting that resistance, and so we just hit the resistance once again. So I was going to give Riot a little bit of a chance, just to make a little bit of a profit, but I was down like 30% on it, so I was just glad to get back to break even, cash out. That was like 12,000 worth of Riot, and then all that's just going to be DCA'd into altcoins.
You got a question in the chat, Tavis?
Man, I don't want to get into this. It's gonna be like I've done multiple videos on this and why I'm bullish on Bitcoin and why I think it's going to go up. I also own, I don't know, people that watch the channel might know this, but maybe you guys, since we haven't chatted, I also own Coinbase and CleanSpark. Like those are my short-term plays to see, okay, when Bitcoin goes to 100,000, if, when, at whatever point. Those are the ones that I eventually want to flip because Bitcoin is just a long hold for me. Like I don't want to touch it at all. And then in terms of the altcoins that I own, I just own Ethereum and Solana. I want to eventually sell those at some point or another and fold them into Bitcoin and come out of this, market with just Bitcoin and get rid of everything on the side as well. But we're going to see. I mean, I think a lot of people expected Bitcoin to be breaking through all-time highs by now, and it's been struggling a little bit. I think it hit 73 and then dragged back down.
Yeah.
Yeah, but I was watching a video. Lark Davis, he's one of my favorites. He put it out yesterday, I think, and he's like, this time in October on the 4-year cycle is like over the next, I guess, 11 days now. It's never been like that's been the bottom. Like the bottom has already been in. So if the bottom's not already in, according to the last 3 cycles, it will be in over the next like 11 days or so. And October's been good so far. I mean, and September was positive as well. So Bitcoin's been doing well. Some of the altcoins are up like 100% over the past like month and a half.
Yes, I saw somebody on Twitter who's doing technical analysis on Google search volume, saying that altcoins had a breakout, which is kind of hilarious. But yeah, I mean, there's a lot of search volume there. I think we're gonna break at some point or another. I don't know. Next 2 weeks would be great. After the election, depending on who wins, I think you could have a stronger move. But yeah, for me, Bitcoin is like a pretty boring type of, like I don't do anything with that position, right?
I think the markets are starting to front run a Trump win. To be honest with you, with Bitcoin, because with a Trump win, it's definitely going to, like, if Kamala wins, I think it sells off, maybe 10% and then just continues to go. But if Trump wins, like that's going to be the start of a big move, in my opinion. And I think we're starting to see that because he's doing significantly better the past week in the polling than he has like the past 2, 3, 4 weeks. Everyone's starting to forget about the last debate, which he performed very poorly in, and Kamala's media blitz over the past 2 weeks was pretty much a failure. going on all these different podcasts, and she went on like this podcast called Call Her Daddy or something like that. And she's just doing weird stuff, like she's trying to seem too authentic, going on late night shows and drinking beer. And Tim Walz is out there trying to shoot skeet or something like that, and you can't even handle the gun properly. And it's like, you guys are not authentic at all,
Real? I thought somebody had like made that up. Like that really happened, guys?
Yeah.
Because I saw a video, he was like struggling, right? To like,
yeah, he was.
But I didn't. I thought that like at first I wasn't even convinced that it was him. I thought it was like what's it called? CGI, AGA. What is these fancy
CGI? No, that was real, dude.
Really?
Yes.
It looked like he never touched a gun in his life. I don't.
But my question was,
Isn't he
who
a gun
posted
owner?
that? Like
Is he a gun owner?
my question was who like if they're out there doing, he's out there, that's obviously trying to like play to, some of the more conservative, gun rights type of things. So who was there filming that he allowed to video and post that?
Why would you even put that out?
Right, that's what I'm saying. You had to figure it's just his little team of media people, and they were going to try to do something cool and put that up.
Can you find that video, Tevis? Dude, because I saw it one time. I legit thought it was fake. Like, I legit thought, no effing way that this guy could be like so inept with the gun. But I mean,
Okay, hold on, let me find it.
Trump is about to go on Rogan as well. I think that's really going to help him.
Is that going to happen? I heard Joe talk about it, but I didn't.
Yeah, I think it's going to happen. I saw Patrick Bet-David was putting it on him to a little bit of pressure.
Is there any way it's not going to demonetize you or anything, Tevis?
That's all right.
Yeah, that's my theory, and it never fits quite right. Never fits quite
right.
right.
This shit is comical. This is real.
Governor, what kind of gun is it? This is a Beretta A400. I bought it when I was shooting a lot of trap because it has a kind of their patented thing, a kickoff. So when you get old, it doesn't hurt your shoulder as much.
Yeah.
So yeah.
Also,
is that what he said?
He's also done a couple interviews where he's already like going against what Kamala has said her beliefs and policies are. As far as like he wants to do away with the Electoral College and some different things, and it's like, don't you know, like your campaign is not agreeing with what you're saying. And he's also gaffed, I think 2 times now, saying like, we cannot afford 4 more years of this. And it's like, what are you talking about? Your whole thing is a continuation. It is 4 more years of what we already have, and they're both just walking gaffes, man. It's
dude, let me throw this up. These comments are fucking hilarious.
Dude, your shot's fire, dude. Can I have some of these people for my lives?
Yes. Hold on. Let me throw some of these. You're gonna do something for the first time. Don't do it on camera. Either hasn't done this in a while. First time loading a shotgun. He looks more comfortable with his wife. Fumbling a $2,000 shotgun, trying to convince himself that he's a true gun owner. Same energy.
I remember this lady was the one trying to protect Trump, right?
And then this one got me the burger one. It's super cool. Man, I love the internet. It's the best.
And Kamala posted a picture on like her jet, her Air Force 2 or whatever, and like her earphones aren't like plugged in to the phone. You can see, and like there's just her campaign staff is just awful, man. They just so bad. So anyway, bringing that back to I think the crypto market is starting to front run a little bit a Trump presidency, which will obviously be infinitely better for crypto. So
Agreed.
That was where all that was really about.
So Tevis, you're obviously now trying to sell some options or specifically covered calls to bring some money through the door.
Yeah.
So what I would like to do is walk you through an exercise on my son's account to see what would you have done to maybe fix that situation, because the best scramblers, like you bet on fights, right? You're a junkie, right? Like you're a DJ like I am.
I am a junkie, yeah.
Okay, so the people that are really good at jiu-jitsu, they tend to do very well. They're also very good scramblers. So I feel like the reason that I do pretty well selling puts and calls is I have this ability to scramble when shit is getting out of hand, and I have an ability to stay calm in the heat of this fire, right? So I want to show you a situation that I created. This was all me, nothing to do with my son. I thought it was a good idea to sell some calls, and the shit got out of hand very, very quickly. And I already remedied it a little bit, but it's called a Band-Aid trade, meaning the patient's still bleeding out. We're on the way in the ambulance to the hospital, but now we're going to have to wait about a year for surgery. You follow me? Because of the way that I handled this situation. So I want to walk you through it, and then I want you to look at it and visualize what would you have done differently, because this is the kind of stuff that's going to make you better.
Okay, I'll do that. Let me first throw onto the stage Matt Money.
What up, Matt Money?
What's up, you high flyers? Can you guys hear me okay? I'm switching up a setup, and there's a new desk.
Anytime Matt comes on with me, I feel compelled to show our microphone.
Hey, that's the one I have too. Look here.
What? Where's the trio, baby? This blue, what's it called? The Yeti, I think, right? These things are awesome.
Yeti. Cheap mic gang. All right, PG, let's hit it up.
I'm gonna do some of the Joe Rogan ones, like $400 or $500. Ain't no way. I make like $5 a video, yo. I'm not gonna spend $500 a fucking microphone.
Dude, you made like 300 again today. Like,
it doesn't matter, dude. The bottom line is this is a failing business that I have on YouTube, okay? Forget about the portfolio. I'm talking about the actual YouTube channel is a massive fail. YouTube's hard, bro. How do you guys, let's talk about that for a second. Maddie, how much time have you devoted to grow your audience? And tell us how much time you guys devote? Because I've devoted way more time than I thought I would have to get to even a little bit of traction that I have there.
You don't want to hear my perspective. Maybe you do. I guess you're asking. So I gave up, I'm just going to be me. And, I'm not really trying to I don't need the YouTube money, like I got my 9 to 5. And so I'm here. Like if I wanted to clickbait people and do all that and try to be like the other finance YouTubers, like I would just be posting about Tesla and Palantir videos and, I don't know what other kind of videos all the damn time just to be able to get traction. But I post about companies I actually want to buy, so I'll post about Rocket Lab. I'll post about Dutch Bros. Nobody gives a shit about those companies. So at the end of the day, to me, it's about just being true to myself. I'm the one that has to look across the mirror every single morning when I get out of bed. And, for a while, it used to really bother me about like, oh man, like so-and-so is some tool. They don't actually know what the hell they're doing, but they're getting hundreds of thousands of views. I'm sitting over here getting 2,000. But at the end of the day, if you want to compare, like the person that I was trying to compare myself with 3, 4, 5 years ago, they probably have about 20% more money than they did, back when I was comparing myself 4 or 5 years ago. I'm probably 3x at that point.
Right.
And so to me, what really matters is about being myself, doing things for myself, because that's where the actual money comes from. Unfortunately, unless you're doing YouTube to help supplement a business or sell a product or something like that, you're just not going to make money. That's why you see all these guys from like Nelk and Mr. Beast and all those guys, they have a side product because that's what really actually makes the money. That's what actually drives money at the end of the day. It's not really YouTube unless you get a really good subscribership and membership going, like some of these gamers and stuff that are out there. But to me, I stopped caring, man. Like to me, it's about at the end of the day, just collaborating and meeting people like you. Like I really got, like, for example, I know I give Tevis a lot of crap and then I actually want to hear his thoughts as well, because he probably has a different perspective, but it's about meeting up with people. Like
Yeah.
I've met up with Tevis at this point multiple times, and he's, you know, if I ever have a problem or like want to seek out some business advice, I'll pick up the phone and call that guy. You know, like that's a real friendship and businessship that I can't put a price on. And at the end of the day, I'll end up making more money probably from my relationship with Tevis off of something like SoFi, which he, you know, was just like, Matt, stop being a little bitch and buy it, than I will from my entire YouTube. Right. So, and I've been doing YouTube 6 or 7 years. So that's where I'm at. I don't really care if people follow me or don't follow me. I'm doing me. And to be honest, I'm a multimillionaire without their fucking followership or not.
Hey, I do care. I need to get to 1,000 subscribers. Okay. So I do care.
Wait, what's your channel? Like, let's throw it up. We have 100 something.
Exploring my options.
Exploring my options. Yeah, like I think Matt, you know, we're fairly similar. It was interesting because like when I first started YouTube, I cared about, you know, viewers and all that crap, and now I'm like, hey, this is, if I put this as a percentage of my total income, it would be like single digit percentages. It's very, very small compared to my actual work. But at the same time, like I think the real traction that I saw on YouTube is when I started making and participating in a community with people. And that's, I think, the cool part, right? Because, you know, similar to Matt, like I can't do too many videos. I aim for literally one live stream or 2 live streams and 1 video a week. That's my cap. And that maybe takes me, I don't know, 6 hours a week, something to that effect. And I was going to do this stuff anyways. Like I really enjoy the game theory of the market. I like, you know, the novelty of it. Every day is sort of different than the last. It's similar with my career. Like that novelty aspect is what draws me there. A little bit of like a chaos junkie in that perspective. And so I was going to do this shit anyways. It's cool to do it with people that I can bounce ideas off of and hear different perspectives. And
For sure.
I wouldn't have ever gotten into covered calls if it wasn't for like, you know, watching TJ's channel and I wouldn't have gotten into dividends. I mean, Matt knows he was literally on the call, you know, in January that I started my dividend account. Steven Fiorillo called me like literally this morning just to check in, you know.
There's a wild man. I love it.
He's like, hey, just checking in on you. How you doing? And so I think that, you know, some of my closest friendships have been people that I've just met online, which is weird to say because it sounds like so like perverted and creepy, but it's just people that live predominantly in Texas, actually.
Yeah.
So there's something about
come on over, bro. Texas is big. We like those Canadians. Y'all are friendly. Yeah, so like my journey on YouTube has been long. You know, it's long. Like I've probably gone live 1,000 times probably. But it wasn't to like, oh, I want to grow this amazing big channel. It was because I was documenting doubling my wife's portfolio live on YouTube so that I could write the book about it, right? So I always just wanted to chronicle the journey, if you will, and then that got done. Took most of the videos off, and now I'm stuck trying to write the freaking book. Luckily, I've got people helping me now, and then with this use of artificial intelligence, it's finally gonna like catch fire, and we should be done by the end of the year, thankfully, because my members in chat keep bugging me about it. I wish I never opened my mouth on this damn book, dude. Like this is probably going to be a one and done. I don't care if it ends up being a successful venture or not, because it's just so much easier and more natural for me to make a video and show you guys how to sell puts, sell calls, roll when it makes dollars and cents, versus like trying to put all of those thoughts on freaking paper. Man, it is a task. Like kudos to people that can do that and do it well. I'm definitely not a writer or an author.
So
But the big thing for me though, and I told you, Tevis, at the Aria, was the fact that I can pick up the phone and call the Emits of the world, to call you, call Dallas, and spring, you know, literally a multi-million-dollar trade idea and get some pretty awesome feedback. I mean, what is that worth to you? You know what I mean? Like, what is that worth to you? So to me, it's like I almost feel like I created a virtual brokerage of sorts that helps me manage the hedge fund. It's kind of weird. And then nobody's on payroll. Everybody's just doing it out of the goodness of their heart. And that is just something that is so priceless to me. And I feel that the weirdest thing about it is, you know, I have lifelong friendships, as all of you guys do. But some of the closest friendships that I'm developing, fostering, and cultivating are because of the freaking little channel that I have. It's like this. My wife's like, "Oh, why is Dallas Matthew always on the phone?" You know, like because she goes through my phone, like, and I'm like, because you know, he talks about stocks. You don't want to talk about them with me. Like I was saying, like you have that one thing in common with them, and it's just like I did in my real life. I don't know how it is for you, Matt Money. Dude, people don't want to talk about fucking cover calls with me, like on the real. You know? Like they don't give a shit about my pain with SoFi right now. Like they don't care about any of that stuff.
I know, like when Bitcoin made its all-time high, like I was at the gym and it was like I wanted to just run around and say like, guys, oh, you see what's going on? Like Bitcoin just hit an all-time high. Like I was looking around for like people who were like maybe looking at their phone or like getting Robinhood alerts, and I'm like, the world doesn't know Bitcoin just hit an all-time high. You know, it's really like you said, not a lot of people to talk to about it.
Yeah, I mean, ultimately, that's I think why I started just making content just to share thoughts and get different perspectives, right? So I think there's similar overlaps across the board. Just real quick, since we have 140 people here right now, this is Dallas's channel. So definitely go and follow that. I also put the link to the channel in the chat. Let's get him to 1,000 people. And Matt, what do you want to talk about? We're talking about selling covered calls, Matt. Have you maybe talk through one of your recent trades? Let's hear it.
Which Matt?
You.
Oh, I sold. I rolled up. I don't know. I rolled up my cover call on Nvidia. It's about $1.30, so it was a 124, 125. So I was out underneath because I've been trying to just like capture my money. My cost basis at this point is like down to like 110. I bought it at 124 a couple months ago, so I'm just trying to like at this point just capture anything because I just knew that it was something indecent to put money into. And so now I think I put it at the 130 for November 15th. And I think I sold it for like 18 or 19 bucks. And so I don't think it's going to get to like the 140-ish mark. But if it does, then, you know, I'll either keep rolling it if I think that it's going to continue to persist, or I made my money and my cost basis is down into like the low 100s at this point because the premiums have been so juicy on Nvidia that I'll just let it get called away. I mean, either way, you know, I've made a little bit of pocket change on it. I think initially the money that I had made was, or I had put into it was like 25 grand. It was kind of small of a position for me. And then, you know, I've just been collecting a couple $100 here and there, and enough to basically get my cost basis down like about 10 grand. Is that about right? I think so.
Yeah.
No, more like 5 grand. More like it's like I got it down more like 5 grand. So I'm happy with it. That's probably the other one. Trying to think if there's any other big ones. I mean, I sold out of my TQQQ early. I wish I had held on to it this week, but I've been holding that one since 2021. So I was up about 45, 50% on that. I just feel like right now with the uncertainty in the market, even if I missed the all-time highs, it was better to have the 100 grand in my pocket than, you know, risk it going back down to 30 grand like it did in 2022. And so I'll miss the peak, but what I won't do is I won't miss the bottom. That's for sure. At least I'll dollar cost average in when TQQQ starts pulling back pretty aggressively. So that one I'm going to try to trade a little bit better. That was my biggest regret of 2022. I didn't mind holding Palantir into the dirt. I didn't mind holding Rocket Lab into the dirt. But TQQQ, that one was kind of obvious that that one is going to pull back pretty heavily. And I just held on to it through the end of 2021 into 2022. And I saw that position basically go from like 80 or 90 grand all to like 25 or 30 grand. And I'm just like, that was kind of stupid. So you learn every time you go through one of these cycles. And I don't know if it was TJ or somebody else, or it might have been Chris Patel. These downturns, not saying these downturns, but any downturn is where you really can make massive gains in your portfolio, because you can find things that are absolutely mispriced for no reason. Palantir was a good example. SoFi is a good example. All these opportunities that showed up in 2022 were just good examples to be able to be like, yep, that's my horse, right? Like, and everything else, like you get to see like the tide go out, as Warren Buffett says, and you get to see who's really effed and who's actually going to make it through. And that's when you can kind of see who's all fluff and who's really got the rock hard potential going forward, you know?
Hey TJ, I did have I'm just saying this so that you don't forget. I did, because you didn't. I wasn't aware that you already handled that SoFi trade, so I did have some. I did a little brainstorming today on some things you could do.
So
Yeah, maybe let's look at that.
I didn't handle it well, by the way, on purpose, so that we can use it as a teaching segment. And also, it's just because I'm launching the fund, and I literally just needed to put this portfolio in like the closet. Like, I don't want to have to even, like, I don't even have to open it for like the next 6 to 9 months. So just, because when life is happening at you, or coming at you, the cool thing about selling puts and calls is you decide how busy you're going to be or not be, right? And that's the reason that I started selling puts and calls, because I was hustling, doing Uber, Lyft, and playing poker and selling wine tours, driving on my wine tour van when I didn't have the money for a chauffeur. So I needed a strategy that I didn't have to like be glued to the computer or the phone, right? Like, I didn't have to be distracted all the time. Because when I was swing trading, my goodness, dude, I was opening the app. Have you ever gotten that deal on None of y'all are on Robinhood. You have an account on Robinhood, right, Dallas? A little account on Robinhood?
Yeah.
It gives you a thing like how many times you've logged in to your account, like an annual, like a kind of like a screen time type thing. And I had logged on like some 15,000 times or something, dude, in a year. And I was like, dude, this is ridiculous. Like, it has to stop. And then when I went into cash secured puts, covered calls, rolling, I think that number went down to like 3,000. And then I got the notification for last year. Now, this is just on your phone, by the way. Like, this is what I was tracking it on the phone, not like the computer as well. I think like I'm under like 1,000 now for the year, so about 3-4 times a day. But this was like serial, dude, like always on, like, and I don't know what I was looking at. I wouldn't have any money to make moves. Like, I was just like addicted. It was like watching a real life video game or something. But anyway, I have this little thing here, Tevis, if you'll allow me, if you'll indulge me, if you will.
Yeah, throw it up.
So I have my son's account here. I'm going to be gifting this account to Jeremiah when I can grow it to 250,000, because I feel like 250,000 is kind of the new 100,000 if we really take into account freaking inflation and stuff. So I wanted to set this account to get halfway there by the end of next year, and literally just using 2 horses. So essentially I have 6,000 shares of SoFi, 3,000 shares of Riot, and I've now got covered calls on both of those at 15. And then I've got some Leap cash secured put that I sold on SoFi. This is all, back in the day. The 2 $15 calls, or I did those today. And these are in the distance, and those are printing. So this is all on total return right here. So you guys can see that I've got pretty decent entry points on both of these horses. And then these covered calls, I mean, these stocks have quite a bit to run. But what happened was I had gotten into this situation with SoFi, and it started running, right? And I had covered calls on it $9. So what I did is I rolled these $9 covered calls right here. I rolled them from 9 to 15, and it cost $2,823. So I did that for a debit because I was like, I'm going to pay $2,800 to qualify for $6 in capital appreciation. Multiply that times 6,000 shares. In my little brain, it was a no-brainer, right? It's like 36 grand on one end, and I get, I have to fork out $2,800 right now. And then I had these leaps that I had bought as well. So I had bought these leaps for 1,080. I unloaded those today. These were lottery leaps, $15 leaps for June, because I wanted to position the portfolio for Anthony Nota's PSUs or whatever. So I just sold those and I locked in a profit. And the reason that I had to do that was because in this account, there's margin being used. And I want to wipe out the margin because I've deposited 35,000 and I've got 15,000 that's going to be going over there here in the next week or so. So I essentially wanted to wipe out most of that margin. I'm still going to have 182, but there's not even interest going to be collected on that because Robinhood lets you work with 1,000 or 2,000, depending on your account, of free money, if you will, like margin that they don't charge you interest on. So that's what I ended up doing there. And then on Riot, I had I think there were $10 calls for January. So these were out of the money. I didn't have to do anything with them today, but the reason that I chose to was because I needed to try to get rid of some of that margin. So this here is just showing, that I had just picked up some shares here and there, bought all of these shares on margin because Riot was at prices that was go time for me. And I knew that this injection of cash was going into the account. So it was all calculated as far as that goes. But I picked up 3,150, rolling these $10 calls to 15 so that I can qualify for $5 more of capital appreciation. And this was also going to offset the hickey that I had taken on the rolls on SoFi. So now essentially I've got 9,000 shares strong in the account, and they're all scheduled to sell the beginning of 2026 at $15 a share. And you add the 15 times the 9,000, that puts the account at about 135. So then I'm essentially one double away from the goal at that point. So that's how I handled that, Dallas. What do you think? Because I know that I had given you this. This was going to be our episode on wheelers. Like, how would I go through that challenge? If I want to grade myself objectively, I'd give myself probably like a C plus because I was able to accomplish higher strikes. I'm going to be totally able to get out of margin. That was also a goal. And then I put it in a situation where now I can focus on doing the blue sky, that's the most critical component you sign whenever you're doing a hedge fund. That's why I say may your sky stay blue and stocks green. It's a pun on that was the day that changed my life. Aside from being married, it's when I signed on the dotted line for the hedge fund. So that's how I came up with that little thing at the end of my videos. So I feel pretty good about it, but I'm definitely open to criticisms. I think that there's definitely other ways that I could have gone about it, but I was looking for the easiest way to fix the problem, and I don't have to look at it. SoFi is free to run, Riot's free to run, and if they go to like 20 or 25 in 9 months, I can look at it and see if I want to put a January 2027 on there and maybe go from 15 to 20, even if it costs me a couple $1,000, because I'll be looking at, well, I'm going to qualify for $5 more in capital appreciation on 9,000 shares. Well, that's another 45 to the good, and that gets me a little bit closer so that I can essentially hand the keys to the $250,000 account to my son if I believe that these horses have the legs to get.
So, yeah, it's a tough position to be in because the stock's so far past. And I know you knew that, but I don't really blame you because SoFi had several like 8, 9, 10% days. So I think if SoFi would have just grinded up a little bit, it would have given you would have been able to start managing this a lot sooner and better positioning yourself. But it's hard because when you get these big pumps, you're like, all right, well, do I want to manage the trade? It went up. When you're looking at some major levels of resistance anyway, it hasn't proven that it can hold these big levels. So like, it wouldn't even really be wise, in my opinion, for you to have managed it at that point because it hasn't proven it can hold these levels. But was brainstorming today, and I know you didn't want to pay premium. So I was trying to think of something that we could collect a premium and then use that to help mitigate any continued movement. And the only thing I could really come up with was, and don't tune me out on the first part. I know you are when you hear this, but because you can't do more cover calls, but you can do call credit spreads.
Right.
So that's the first part. And I'm sure you can make this all one trade.
And I know, and I thought about it, but because of my inability to manage,
I know, but listen,
bro, I was like, ugh.
I know, but listen, I'm sure this is called some Jade Lizard, Iron Condor, Cocker Spaniel trade if you mix these all together. But I think so. I looked at the selling the 11 calls and buying the 12 calls to create a call credit spread.
Right.
Then you take all that premium, and so that's a defined risk trade. So your max profit is $28 per spread. Your max loss is 72. So that's a decent ratio. And then I was thinking you could take all of that money that you make. Let's just say you collect 10 grand in premium. Then you take that 10 grand and put it into call debit spreads on SoFi. And I came up with the 12 and 13. So you'd be buying, these are January 2025. So both of these are January 2025. For the call debit, you would buy the 12 and sell the 13. But that one gives you a 4x. So it's like $21 is your risk, but you can make up to 80. So I think there's a spread, there's an alpha in there, because you can only lose like 2.5 times your money if your call credit spreads go to zero. But if they don't go to zero, then you took all that premium and then you 4x'd your money with that premium.
Right.
That's the only thing I could really think of, because
so let me give you all the best one, and it came from my son, but I'm not ready to let him know that he's better at this than I am. Okay. So this is what my son suggested. It was like, Dad, sell everything and let's just go buy the lottery leaps at the 1/16, 2026, buy the 15 lottery leaps, and then we'll sell calls against those. And now you've got your income stream and you have unlimited upside potential, and we'll do it after earnings. And I thought that was the right move, but I wasn't ready to just be like, oh, son, you're going to have a portfolio. It's got nothing but an eroding asset, and let's see how it goes. Because I was like, dude, that's just like, you're showing me that you're 24 years old. But then I went for a ride on the motorcycle. And I was like, I think Jeremiah might have been onto something, but I'm too conservative because I'm 49. He's 24. I was like, maybe I should have done like $30,000 worth of those leaps, and then I didn't even have to manage Riot right now. Riot was still a hotel that was bringing in money. I chose to collect a little bit of money up front. It was scheduled to give me about $6,500 in premiums the whole way through. Doing it Jeremiah's way, I wouldn't even have margin right now. I wouldn't even have to deposit the $15,000. And he was like, let's just go along the leaps. If we think SoFi is going up and to the right, why wouldn't you rather have a leverage instrument versus just getting 1-for-1 on these shares, where over here you're controlling the shares with only about 35% of the equity required to buy the shares outright. So, I think that you're onto something with these credit spread, debit spread, Jade Lizard, flying saucers, whatever they call these things. Because guys, y'all got to know, keep it simple, okay? There's only 4 things you can do with options. You can buy calls, buy puts, sell calls, sell puts. Everything else is a combination of all of that fancy shit. And they call it these crazy ass names. And for whatever reason, they stuck. That's why I never use things like vertical diagonals, calendars, all this other crazy shit. Because I feel like you lose 90% of the audience when you talk like that. I like yours a lot better than mine. I feel like mine was just easier to do, so I opted for it. But I do have to fork out the 15 grand, because if not, every month they're going to hit me up for $70, $80 in interest, whatever that is.
So there's two comments, people saying, isn't IV too high to buy leaps now? That's why when you do it a spread,
But he was suggesting doing it after earnings because the IV crush would have already occurred.
Okay.
But like,
I was thinking of it specifically for you because I know you wouldn't really want to just buy leaps because you're paying premium.
No way I'm YOLOing my son's account on fucking leaps, bro. Not like that.
Isn't there a risk though that after earnings, that if their earnings go the way we think, that you're gonna end up paying like a really shit premium because the stock's gonna pump?
No. So here's the thing. The reason that I placed this bet, guys, is because the objective has been met. The goal is to get this account to 100,000 by the end of next year. So I positioned it to be at about 135,000 by the end of next year, because if they both go to 15, which I fully expect this to happen, by the way, then I have the ability to just check the box and start all over again. And I'm one double away from handing him the keys to the rest of his life, if that makes sense, right? His inheritance while I'm alive, if that makes sense. He's got a lot more coming to him, but I got to die, and I ain't in a hurry to do that. So I'm trying to give him a life benefit here, not a death benefit, right? So it's because I'm not in a hurry to kick him. Me and Kristen, we want to go see the world and stuff. You know, I'm only 49 years old. I feel like God's going to give me a good 20, 30 years, you know, hopefully. But I want to give my son something to get moving and grooving now. He's got about, I think, 25 in his 401k. He's only been working at USA for, a year and a half. So he needs to build it up. And I wanted to also earn it too, because I don't know how it worked out for you, Matt, but I feel like you're self-made for the most part. You got that great job or whatever. And it feels good to know that you created most of that versus just something like handed to you on a silver platter, if that makes sense.
Yeah, I mean, I do have to give credit to my parents. I mean, they paid for my school, so I have to give them credit there. But I could have been a complete loser and done some weird degree. But yeah, I decided, petroleum engineering, the first class I took my junior year, because that's the first, like, you take other prerequisites and stuff like that. You take like general sciences here and there. But the actual first petroleum engineering class, I'm just sitting there like, this is badass. Like, this is what I want to do. Like, learning about rocks and how there's basically liquid inside the rocks, and you got to basically put a pressure drop to be able to get the fluid to flow through the rock. I mean, this shit was just crazy. So anyway, it's been a blast. The past 11 years has been fun. But yeah, I mean, I think that's the hard part is, like you said, TJ, you got to start somewhere. You didn't just wake up one day and get an $8 million account, right? You hustled, you saved money, you put your blood, sweat, and tears in to be able to scrape up whatever money you could. And then luckily, you met some people along the way and were able to kind of start something. But
yeah,
nobody's just going to hand you $1 million unless you're Bill Gates' son or something like that.
Donald Trump.
So you gotta, unless you're Uncle Donnie. But I mean, if most of the time the hard thing is people got to put away 15 to 20%, if not more. I mean, I put away probably way more than 15 to 20%. And you got to get that seed capital, and you got to be smart with it, or at least take very calculated bets where it'll make big moves in the portfolio, but not risk the entire nest egg.
Absolutely. And guys, the other thing that I want to just emphasize this, and this is all for your benefit, Tevis. I'm hoping that 1 second, I'm going to mute out mine. Here we go. Sorry about that. I think my wife ordered a pizza or something, and the dogs, like, they're just like, between them, they weigh like 18 pounds, but they act like they weigh 180. So, like, y'all can't do anything and nobody's afraid of you, but that's their job, is to bark when somebody comes to the door. But anyway, let's just say that these stocks don't pump. 6 months goes by. I've collected a lot of that theta. Then I could probably roll them in, you know what I mean? And then start collecting that monthly rental again and stuff like that. So there are options if it doesn't go the way that I think it's going to. But I do think that SoFi is going to be at like 20 by that time, maybe hopefully closer to 25. And I feel like that's an absolute positive problem, because then I'll be like, okay, how much more of this upside do we want to capture? Do we think that SoFi is going to hold that level long enough to justify that roll and lock those funds in for a long time? Because what you don't want to happen is you don't want to roll out another 6 months to a year and then have the damn underlying come crashing down and you lost all your liquidity. Because that has happened to me before. Thankfully, I didn't have the YouTube channel yet. I kicked the covered call out a year and a half just to watch the stock go back below my original covered call. And dude, those are the few things that make you feel really, really, really stupid, like in a very special way.
That happened to me in August when CrowdStrike came back to 200. If I wouldn't have had that to January, I could have closed that out right then and there. And now it's back over 300, so.
Yeah, this is crazy.
You guys
Anyway,
ever just like if a stock, because this is what I'm and when you were explaining your son's position, one of the thoughts that just came into my mind was like, if the stock has run away from you, why not just let yourself be like, let the shares get called away and then move over to some other stock that there is? Like, why do you have to try really hard to work that situation on those two names when there's like an endless sea of opportunities out there?
Awesome question. This is the teaching segment for all of you guys, because it was advantageous from a tax perspective. Because those cap gains were going to go from short-term cap gains to long-term cap gains. And that's the easiest way to get a pay raise in the market. Because if you look at the portfolio, you saw that the year to date on the portfolio is actually pretty decent right now. We got off to a slow start, but when these things started pumping, I mean, this thing's sitting at 52% to the good, and it was flat up until very recently, guys. And then it started pumping because, SoFi and Riot started waking up on the right side of the truck bed. And then, I mean, my son's got some pretty decent entry points here. Like SoFi at 713. I'm sure there's a lot of people in the chat that would be okay with that average. And then Riot is probably in that same level, the $7 level. Yeah, $7. I mean, my goodness, I know it's a Bitcoin miner. I know they dilute, et cetera, but I think Bitcoin's going up, and I think that Riot's going to benefit. They've got these huge growth plans in place in Corsicana. And if they can figure out how to keep growing their fleet of miners before they get antiquated, because that's the thing about installing a bunch of these machines. Dude, by the time you're done installing row Z, if you will, row A, B, C, and D are already obsolete. So it's like you're like a dog always catching your tail. You know what I mean? It's a very vicious game. Very, very tough. But yeah, dude, I think that's a real good point. The issue is this was essentially going to be stale money until January, because these cover calls on SoFi were at $9 for January. So the issue is I could have dealt with this early. There was a time where I considered just closing the covered call, and it was going to cost like $500, and I was going to leave the shares unencumbered. But true to form, I don't like squatters. And yet again, that mentality costs me. Let's call a spade a spade. Dallas is laughing because he knows me better than you guys do when it comes to this. I abhor squatters, bro. Like, I am I'm the landlord, but you got to pay me some rent. And it backfires on me, and it creates these situations. So, Tevis, I think that there's opportune times to sell covered calls. And if there's something that I would like to tell you, I would like to share advice with you that I don't necessarily heed all the time myself. So it's one of those, like, listen to what I say, not what I do, like a parent, right? Do as I say, not as I do. Dude, wait for an opportune time to sell some timely covered calls. Make sure the stock's a bit overbought, or maybe there's just not a catalyst. Like right now, Tesla's ideal because we already know that robot, all this shit already happened. A more opportune time even would have been waiting till earnings because they're right down the road. And then now you have all the information, and you got another 60 to 90 days to dance before you even have to think about it anymore. So anyway, man, all in all, I think it's all going to work out. I would love to see both of those stocks run. And then it's like, man, my son's got a 6-figure account and we didn't have to push that many buttons and we have to manage. It's essentially a glorified buy, hold, and hope at this point. And that's what I was looking for because of where I'm at in life right now. Like, I don't want to have to open this account. I always talk about it like one time on the channel, maybe every 3 months or so, because people will ask about it. But other than that, I just don't want to have to revisit this situation very often.
What dictates that time frame on that account? Because like I don't know. As you're saying these things, and also just what I'm seeing, I just feel as though like opportunistically making good covered call decisions is great, but I feel as though you can get into trouble when you try to force it or when you try to juice a certain percentage or a certain time frame. Like that's when the market can go against you with volatility and whatnot. But if you're just chilling and you don't have like a strict time frame, you have generally a like, hey, between this and this, it's fine. Like I think that you're gonna play a more like a smarter game. So I'm just wondering, like, what's dictating the time frame for your son's account to be at that, quarter mil?
Because I would like him to have the option to not have to work for the man when he's 26 years old.
Why 26? Why not?
It's just something that him and I sat down with at the wedding. We were in Pebble Beach. He was already working at the job, and he wants to do this. Like I can see it in his eyes. This is what he wants to do, but we need to have the right capital, and I want him to participate in this, right? I just be like, oh, here you go, son. You'll be that spoiled ass kid, and nobody's gonna ever respect you, right? Because you didn't earn it, right? Because I mean, that's the way the world is, dude. Like, if you have successful parents, they're gonna shit on you a little bit. So you need to show them that, hey, you got the goods too. And I don't want to rob him of the opportunity of any type of struggle. That he has to know that the world's not all, rosy colored glasses or whatever, like rose colored glasses. Like the world can be really mean. And I wanted to be prepared for that. And I want him to know how to fish. Like it's important to me that he knows how to fish. He knows how to problem solve, because the only bird that doesn't learn how to fly is the one that doesn't leave the fucking nest. And I want my son to know how to hunt so that he could always eat, right? I want him to know how to fish so that he could always eat. And so I want him to grind a little bit on the job. He's doing Uber on his spare time because I got him that Tesla. So he treats that like a little business as well. And I want him to hustle, bro. I want him to hustle because he's looking at getting married here in the next year and a half. So he needs to be able to provide for that family. And I want him to have something that doesn't occupy all of his time, so that when he becomes a dad, he could be very present, because I wasn't able to be present because I owned a business, but in actuality, the business owned me. Whereas with this situation here, dude, you do have a lot of time on your hands. And I wanted to be able to enjoy like being a dad and not missing birthday parties and Christmas parties and anniversaries and all the things that I did grinding in the oil field, because I lived on location. I don't know how Matt's situation is, but I had to live on the rig 14 days at a time. I think my largest hitch was 93 days in a row. And not going home for 93 days, do you get kind of, like I wonder what's going on over there. I wonder if the dog's going to recognize me, like all those things. Like your mind starts playing tricks on you. So I don't want my son to have to live that life. I think as parents, I guess I'm the only parent in the panel right now. You always want better for your kids than you have. I think that's just like something that the way that God wired us for whatever reasons.
Yeah, also, I think it's worth saving those way deep in the money calls, because so I was just looking at the chart. Palantir in May of 2023 was at like 740, and then by like May 10th, it was over $10. So I pulled up my little wheel sheet that I use to keep track of credits and debits, and I've been rolled. So I had on May 11th, I had written Palantir $12 calls, and I remember writing those thinking like these are nice and safe. Like Palantir just went from 7 to 10, so I'm putting it at 12. Like there's no way it's going to go from 7 to 12 within like, the next month. And dude, it freaking did. And so that got rolled from ever since May 11th. It got rolled from 12 to 15 to 17 to 18. Now it's at 19, and I'll shortly move it to 20. But I think so. I've been rolling that since May of 2023, so like a year and a half, but almost. I think it's still worth saving because you have an insane built-in profit already. Because he was, if you're buying Palantir in the 7s, 8s, 9s, and you already and the like a $12 cover call right now sounds stupid, but that's still a giant built-in profit. So luckily, because Palantir is so high right now, it's built in probably a floor. Like if we had some type of crash, it might crash back to like 20 to 25. Like
maybe.
if we get another COVID thing, where like a true crash, which is like 20, 25%. If the overall market came down 20, 25%, Palantir might come back to like $25. I mean, we just saw it recently, right?
Yeah.
It came back to $22 in August. So it's possible, but it's worth, in my opinion, saving those particular cover calls on a stock like Palantir when you feel like you had like a seriously incredible entry point, and you have a decent amount of shares, because you already have like a built-in floor of, let's say, $25. So in a worst case scenario, it's going to come back to 25, and just slowly but surely you're rolling it up from 12 to 13 to 14 to 15, and you're just slowly locking in like insane capital gains because your cost basis is back in like the 7, 8, 9 level. So it's just worth it because you're getting to hold on to those shares, and it's probably never coming back to those levels. So in my opinion, that's why it's still worth it to just keep slowly rolling those up. If you have a company that has really gone insane and you feel like it could really continue to do so over the next decade.
Agreed. Man, what you been rocking with lately, man? What is your I know obviously Rocket Labs, I'm surprised that you even talking to us with all that money you've been making on rocket business over there. Thanks for talking to us peasants.
Yeah, nah.
What are you rocking with these days?
I did buy more SoFi before it had its recent run up, so I'm pretty excited about that. Really, for me, it's just about, while the market is up here and the uncertainty that I've had, just trying to see if there's anything that I can take off the table. And I've had the great opportunity to make a decent amount of chunk of change since the bottoms of 2022. And the portfolio is up about 80% since the beginning of 2022. Like April 2022 is kind of when I crossed the 7-figure mark for the first time. So I'm up about 80% since then. And so I'm kind of just like, all right, well, what is the next move? And so it didn't, for me, that's why I sold TQQQ. It's why I sold some Shell. I think oil's troubled here, and I think we'll see the 50s here and the oil price actually in the coming 6 months or so. You're already starting to see oil go probably back into 60s in the next couple of days as Middle East tensions kind of calm down. So I don't know what the next move is for me, but what I did see is the opportunity to buy SoFi below $8 and was fortunate to do so. So now I'm sitting on like a 20-30% profit on those shares. I'm trying to think, what else have I been up to?
How do you guys feel about hedging?
I did buy some puts on Palantir actually.
Like, do you think, in my opinion, I don't think hedging is worth it unless you have a portfolio, I would say over like 50,000. I think it's more beneficial just to probably buy the dip as opposed to trying to buy puts or hedging. If you do have a nice size portfolio, I think it's definitely worth it. But what do you guys think about hedging?
I can go first. I don't like to buy puts. It goes against my perma bull Tom Lee-ish nature. But I will sell very aggressive covered calls in lieu of buying puts. And if those covered calls get challenged, I'm okay rolling those up for a debit because I was going to be willing to guaranteed pay a debit for buying those puts. So I feel like it kind of serves the same purpose for me, except you don't have the ability to sell those shares if it really tanks. You know what I mean? So that's like because I recently pulled off that hedge on SoFi. I had sold some covered calls at $9 and for January in the bigger account, and then I rolled them out to 15 for January 2026, and I paid $12,000 for that to qualify for like $300,000 of upside now. So if I goes on this crazy run, because I guess everybody here is familiar with SoFi. I know we don't want to steal any thunder from like SoFi Weekly and the nerds like Tevis that talk about this shit all the time. But what is your price target now with everything that we do know? Do you think that there is a catalyst coming with like on the tech side with Galileo? Potentially, they're obviously opening up the spigot for lending. I think this whole transition year is behind us. This is the things that I feel. Do you think that legitimately SoFi can have a 15 to 20 handle on it now by the end of 2025, and position SoFi or position Nodo to start qualifying for those PSUs come June of 2026?
Yeah, I'm happy to jump in there, but Dallas, you have the screen you want me to throw up?
Yeah, please. This would be a good like screenshot moment for people in the chat. Let's see if I can zoom in. These are just my favorite ways to hedge if people just want to screenshot it. These are all very like low cost options. I think people generally just think like buying puts, but there's definitely like a ton of different unique strategies that a lot of them don't even cost that much money, such as buying calls on SQQQ is very, very cheap, and it gives you that leverage. So these are just out of the options blueprint that I put together. This is a little hedging to the downside portion. And so if people in the chat just want to screenshot it, I figured I'd throw that up there so people can look at different options if they definitely want to hedge the portfolio a little bit as we sit here at all-time highs.
Are you doing anything to hedge, Matt? Like you're besides just like getting rid of like oil because you think oil is in a bad spot? Like you're essentially like trimming stuff that you think might go down?
No, I mean, other than those things I mentioned earlier, I did buy puts on Palantir, $43 November 2020. Sorry, November 22nd or 28 puts. I forget which one. So I think it were 43s for like $3.50 or something like that. So the break even's $39.50. But my thought process is like if they double or triple or something like that, like if it has a big pullback to 40 and the put prices themselves due to implied volatility increase or just, whatever reason they kind of pump up, I'll probably just take that money. It's really for me I just felt like it was a $5,000 gamble against a $200,000 position.
Yeah.
And to me, I was just like, it just seems like right now a little bit over pumped. And I noticed that there was a lot of volume going into it. My thought process is some either big hedge fund or institutional investors were getting into it. And it seems like that volume has slowly started to teeter off over the past week or so. And so I think what you're going to end up seeing is a lot of retail knowing that or seeing that it's slowing down a little bit. You'll have some retail potentially start to take some profits going into earnings. And we'll see. I just think that right now, unless, and not to say that it can't grow into this valuation. In fact, I think it's a cheap valuation if you're looking 4 or 5 years down the road. But the thing is Palantir right here, I think is a growth expectation year over year going into earnings of over 30%. And I just don't know if we're going to get to that point yet. I could be humbled going into earnings, and it could show up as mid 30% year over year growth. I just feel like it's going to be pretty tough. And we were at 27% in the second quarter of a very weak comparable quarter in 2023. So if that's the case, I feel like we're going to end up below 30% year over year growth since we had a pretty decently strong 3Q last year in 2023. So it's going to be difficult to get into the 30%. So I just feel like you're going to have a very large pullback. But I guess we'll find out November 4th.
Yeah.
Let me pick up on the SoFi question, though, TJ, because I think it's an interesting time for a couple of reasons. I mean, number one, you have this like macro backdrop of, is the market going to pull back or is the rally going to continue? I think a lot of people that I'm seeing create content out there are split. Like, meet Kevin, for example, is one who's like super bearish. He's like in gold and treasuries right now. I don't necessarily agree with that. Other creators are like, statistically, if we're reaching an all-time high, we're going to reach another all-time high and then another all-time high. Like, it's going to keep running. And then for SoFi specifically, you have an interesting time because it just broke through a level that it hasn't seen since December of 2023 into this double-digit range. And the interesting piece here was this. So this is data-driven investing. He's made this post pretty much every day this week. So he made it on Monday. He made it today. I wouldn't be surprised if he continues it tomorrow, showing that retail is selling into the SoFi rally. And I was chatting with a friend, and I basically asked him, I said $10, and he said I sold. And I asked him, are you fully out? And he's like, I'm going to get back in, but essentially taking some profit off the table and saying, okay, well, we've seen this dance before. We know SoFi. We know it trades in this channel. And I think the data just supports that as well, with Chris showing even today, like retail was selling to the strength. SoFi was green. Institutions are buying. Institutional ownership is rising. We have a rally heading into the earnings, which is significant because it's going to be that fourth quarter of profitability. It's going to lead to, a trailing 12-month view being green for SoFi. My opinion is that there's momentum that's building, and this time is different. I mean, I'll probably end up eating those words, but from a selling covered calls perspective, I think that's really interesting as a backdrop, right? Because you're going into earnings, which is like, you're probably not going to touch it through earnings. You're either going to make a play in the next 2 weeks before, or you're going to see what happens after earnings. And then going into 2025, you have a really great macro environment for SoFi. It could very well be a year where the company hits that $20 range. Absolutely. Especially if all these analysts chase and increase their price targets. If some of the major ones turn bullish, if rates keep falling at the pace we expect them to, if the lending segment actually comes in positive and not negative for the year, and if they provide good guidance. I think that's going to be the key point here that I'm looking for. I'm looking for good guidance to say, hey, the rest of the year is going to end up really strong. From an EPS perspective, I know analysts are expecting like 7 to 8 cents for the rest of the year. We're actually going to come in at 12 or 13 or whatever. And so those are the pieces for SoFi that I think can lead to a re-rating. We've seen this year a move like that with Palantir. We've seen this year a move like that with Robinhood. I think we definitely could see it with SoFi, especially if the macro supports it, not only from a rates perspective, but also the money from the sidelines starts flowing into the Russell, which has been the index that underperforms everything else. You mean like Dow's all-time highs, S&P's all-time highs, what's the other one? QQQ is all-time highs. And then you have the Russell. It's like not even close to being there. But I don't know what's going to happen in the short term, right? Is it going to pull back from that $12 range and reinforce that self-fulfilling prophecy or that vicious cycle? I think that if it breaks past that 1170 range, that 52-week high, it's going to lead up to form a stronger, higher base for a move upwards. if the earnings actually supports it. Do we get to 1170 before earnings? I don't know.
Well, I think one thing also, guys, to consider is if you look at the last 4 quarters of SoFi on all these, fancy financial metrics, it's going to say that the trailing 12 months isn't really GAAP profitable yet. But that's about to change at the end of the month. So there's a lot of hedge funds that now they have the green light to potentially initiate a position on SoFi when they otherwise would not, because that's one metric that has to be there. And then another metric that has to be there for a lot of big institutions. Again, this is just stuff that I'm told because I happen to own a little boutique hedge fund. So I try to talk to people in my space, right? Another metric that they look at is whenever companies stop printing shares. So like if a company is still printing shares, they won't even consider it as an investment. Like these are just metrics that they look at. Like they're not so hung up on these peg ratios like y'all think and earnings per share and all this stuff. They want to know like, okay, I'm going to give you guys $1 million. How much of that shit are y'all going to dilute right away? Because I'm already playing this stock from behind, So they're like real big on dilution and stuff like that. And SoFi's got a lot of things working against it that also keep it from running to the moon, in my opinion. And also just the narrative, dude. I mean, everything that they pump out is always really awesome, but it's still just bank, bank, bank. Like, where's the technological component going to really come into the mix to warrant that hybrid multiple? But what I like to do, guys, since I have 3 folks that are smarter than me in the chat, how would you manage this position? Because I've given myself, like, I can't even find enough hands to pat myself on the back on this one. I've given myself like an A- on how I played this position. For once, I have a huge position that is not suffering or doesn't have like a ceiling on it. Like SoFi's free to run right now. But like, just give me a real. I'll show you all the position, and then just real quick, we start from with you, Tevis, and go all the way down. Like, how would you manage it, and when would you look to trim, if anything? Like, because you guys are all pretty familiar with SoFi. I know obviously Tevis is the most, but this is the situation, right? We got 150 large on SoFi. We're sitting pretty decent on the shares. Not the greatest entry point, but decent. This was in the $11 or $12 range not too long ago, so I had to beat this horse a little bit. And then there's 5 open strategies. We have got 1,000 leaps here at 10 for January of 26. And then these are the cover calls that I sold for 15 for January. This was a hedge. I had $9 or $10 strikes, and I rolled these. Cost $12,000 to move from 9 or 10. I don't remember what the strike was. And then I went to 15. And then these are just all leaps here. I got 200 leaps at 7, 200 leaps at 5 for January. These I'm looking to exercise. The $15 leaps are just lottery leaps. I'm not. This is just trying to flip contracts. But this one's the one that I'm wishy-washy on. So this is the one I want help with. And this isn't like I'm like legit asking you guys for help. So I'm hoping for like legit brain power here if you guys would do me this solid. So I'm sitting on a pretty decent win already. What would you look to do with it? Because whenever I embarked on this journey, I was like, I want to ride it out until SoFi is the minimum of, the GAAP profitability for the whole year. So that would essentially put it on the other side of these earnings. But then as the story kept developing, and now they pumped out the $2 billion news yesterday and everything of the sort, I'm kind of now of the mindset of like, screw it. I want to let it ride until expiration. And if I have enough of an intrinsic value, maybe exercise on half of the shares and then just flip the other contracts for a profit. So that's kind of what I'm leaning towards right now. What say you guys? Let's start with Tevez, because I don't get myself into these situations very often, because this is outside of my sphere of not necessarily competence, but confidence. Because we're just talking about selling regular old puts and calls and rolling and managing and doing that. This is the shit I'll do in my sleep. But here I'm in a situation where at the end of the day, this is an eroding asset, right? Like every day it's costing me money. It's not making me money as far as from data decay. So that goes against the way the brain's been conditioned for the last 3-4 years. And I'm still not even at break even, right? Because the break even is 1166. So if it doesn't ever get there, I essentially look at a 6-figure gain just go down the toilet. And I don't want to be that guy. So what say you, Tevis? What are your quick thoughts based on what you see right there on the screen?
Dude, I am probably the least knowledgeable around like the actual calls perspective. I don't like, can't you just roll this and go long from a leaps perspective? Like just flip it? I don't know. That might be a stupid thing to say, but
Well, what you could do is you could do a couple of things. One is I could just this is a buy to open, right? So I could just sell to close and lock in a profit whenever I feel like that profit is justifiable in my mind. Another thing that you can do is if you want to bring some money through the door, is I can sell some short calls against this position to kind of get a rebate for all of the money that it cost me to be in this trade to begin with. So that would be initiating the poor man cover call technique or strategy. And another thing I can do is as I get closer to expiration, so let's say December of next year or first part of January of the following year, I could essentially pony up $10 a share. So this is a commitment to buy 100,000 shares. So pony up $1 million and own and have the right to own SoFi at $10 a share, and that would be fine, provided that the funds are there, the belief is there, and if I have a built-in intrinsic value meaning a built-in profit. If SoFi say trading at like $25 a share, because I have a right to buy them at 10, and you're already in the profit that difference, and then I can just sell comfortable covered calls because I would own those shares. Whereas if you start selling covered calls now, you don't own these shares, things could get dicey very, very quickly. So those are all the things that you can do with this position. Dallas, I know you're more familiar with what I got going on here. Would you like to just give me some real quick thoughts on what you do? And then I'd love to see what's in that beautiful brain of Matt Money's as well.
I was going to say this anyway, but Bill White put it in the chat. Like, I 100% agree with lottery leaps. I don't like to get greedy. So when you've reached a point of profitability that you're satisfied with on lottery leaps, I would just flip them. And then, I would take ownership of maybe your $7 or $10 calls down the line.
These are tens. These are tens. So the 5s and the 7s, I bought those with the understanding that in my mind, at some point, I'm going to have some covered calls get away, and I'm going to let those get called away because I'm just going to turn around and buy them back at 5 or 7. But these weren't. I never intended to want to own shares of SoFi at 10, because if y'all look at the dates, March of this last year, ain't nobody excited about wanting to own SoFi at $10. So these were what I call lottery leaves, meaning you need a lot of things to go right in order for this thing to start printing money for you down the road. But here we are.
But now we have to evaluate this now. Now they're not really lottery leaps.
Yeah, that's what I'm saying. That the thing changed. So now that the things changed, my perspective is changing, and this is why I wanted to engage you guys in this conversation, because I didn't really think I was going to be here that quickly.
But don't you have $15 leaps as well?
Only 100 of them.
Okay. So $10 was the highest that you purchased in like bulk as far as lottery.
Yeah, until recently, and I meant to buy 400 more, and I just never pulled the trigger. And then I'm certainly not going to buy them now. I mean, SoFi is just gone all crazy, and I don't like overpaying for stuff.
I mean, like I started in the market swing trading, so I like doing the swing trading mentality of like, when you come up against a major support resistance level, take a third of those and or maybe even 25% of those leaps and just sell them, lock in a win.
Yeah.
As it continues to go up, lock in a win and set your levels and just do it that way instead. If you feel like you might be having a little fear of missing out if it continues to go up.
Yeah, so I thought about unloading half at earnings because I'd still have the IV right in my favor. Because if I wait too long, well, then they're going to lose value that way too, right? Because IV is going to go down. It's called what they call IV crush, I guess. So I was like, if let's say SoFi pumps to this 1170 area, at that point, like, does all the news already get baked into the cake, as Roy would say, right? A little homage to Roy because he uses that terminology a lot. Like, if at some point I start deciding that everything's already baked into the freaking cake, wouldn't it make sense to lock in and win? Kind of take a page out of Matt's playbook and put some of that money in the sidelines and hope for better opportunities down the road. Maybe not on this security, but in something else, because there's 10,000 other opportunities out there.
Can I ask something really stupid? And I'd love for the two of you guys to, tell me how stupid it is. Okay, so the way I'm thinking about this is, what is the benefit of locking in a win here? Well, we have earnings and there's uncertainty with regards to earnings. So great. Selling half makes sense. Is this a thing or is it not a thing? You have 10s right now. Can you roll them up to 15s?
Of course.
Let's say. And so let's say you sell half of your position. You sell half of this, and then you use half of that to buy 15s for leaps, and then you use the other half to buy puts that are more short dated. Can't you just arbitrage the difference? Because the way I'm thinking about it is, I know SoFi is going to be, I'm very confident that SoFi is going to be above 15 in the next 12 to 24 months. I'm not sure that we're going to have,
and that's why I've considered we're just not doing anything.
But I don't want to. I don't want those leaps to go to 0 if it doesn't hit 15. In which case, I want to buy some puts in the short term so I can arbitrage that difference. Let's say in the next 3 months. Is that a thing or?
Well, they wouldn't go to 0 if they were under 15. Well, they would only go to 0 if they're
over time, right?
Yeah, if they're under 10 by expiration.
So this is a good question. How would you think about those contracts if they were at $5? So that's different though, because when I bought these, because I have those, right? I have 200 and 200 at 7 and 5. When I bought these, I literally just bought those because I didn't want to buy the shares right now. Every intention of exercising them. So I don't look at these. I'm just looking at, I got to cough up $5, 20, for 20,000 shares. That was already decided on the front end. So all of this, in my mind, that's just going to be intrinsic value that I'm going to have when I take ownership of those shares, because I fully expected to be above the break even, which is $8.20. When I bought the $10 contracts, the mindset was, do I really want to pony up another $1 million on SoFi when it's already the largest shareholding position? Because if you put this on equity, you buy, I mean, come on, a third of this freaking portfolio is going to be SoFi. So it just started feeling a little bit stupid, if that makes sense. If that's the right word to use or not, I don't know. It just seemed irresponsible at best. As much as I believe in it, I mean, are you going to really do that when you got Tesla on the books, you got Amazon on the books? Are you really going to be that guy? It's cool. Yeah, I might be able to buy a yacht and put Sophia on there or something if it works out. But you could also be the guy that fucking bet a lot of money on a bank that said it was the AWS of fintech. I'm just, you know what I mean? You got to recognize that there is a bear case out there. As lame as I think the bear case is, there is one out there because they haven't been able to pump out a different narrative. What say you, Matt Money?
I think, it's always about 5 things, right? Objective, time horizon, risk tolerance, and really how active or passive you're going to be, and how much money you're going to add. So the thing that you obviously have a time limit this one, so that's something that you already kind of have. You have 14 months to expiry. I mean, just looking at if you go the poor man covered call side, I was just looking, the 15s for November will generate you about $8,000. So it's about 8 cents each. You got 1,000 contracts. That's $8,000. So, I mean, if the goal is the objective is income, and paying yourself a little bit of money while you're waiting for those to potentially fill out, then, you have that. But also what you could do is if you're almost 100% on these in terms of return, like you stated earlier, you could almost take, a decent amount of them off the table and, you know, pay yourself back pretty much and play with the house's money.
Right.
You know, and there's that option. And, you know, at that point, if you lose, you won't feel like an asshole. But if you did hold all 1,000 and, you know, for some reason, SoFi, which I don't think any of us believe will be below 1160, I think was your break even, then, you know, then you won't feel like an asshole. Right. But obviously there's the upside benefit, like you stated, of this thing going to 14 or 15 bucks by the end of next year, which I could see happening. I mean, at that point, if everything goes well, we'll have 8 quarters of profitability going into 9 quarters of profitability. You're eligible for the S&P 500. Do they get it on the first try after 8 quarters? You know, is that, you know, are they going to pull a Palantir in that respect? You know, in that respect, it would be pretty crazy, right? You know, you have a opportunity. The smallest market cap company is about $7 billion, and you're already north of 10 with the current price of SoFi. So it's kind of like, you know, what exactly do you do? Then you also hit on the fact that you already have a $1.5 million position in it. At that point, if it were to continue to grow, you know, would it grow to 2.5, 3 million? And would you feel comfortable with that? And I think that also depends on, you know, and hopefully weighs in your mind. And lastly, what would you do with the funds? Is there another opportunity or is it something where you're like, you know what, this might be a great opportunity to start like a dividend fund, you know, for me and the wife to just like, you know, not have any worries in the world, just put it aside, put it into something like an SCHD or a decent dividend payer, and just be like, you know what, at least I know I'm getting 3 to 4% every year. That's coming to me that I don't necessarily have to work for on an active basis. It's passive. Right. So there's all a bunch of different ways that you can think about it. I mean, if it was me, it would scare the crap out of me because it's already such a large position in your portfolio. Right. But knowing what I feel and what I think is going to happen with SoFi, I mean, I personally would stay on the route of at least keeping some of them, if not half. I don't know if I'd keep 100% if it was me, knowing how much position I have.
So on your line of thought, Matt, what I had considered doing going into this earnings was trimming half, because I essentially would be playing with house money at that point and building out the Amazon position to about 1 million, because then I would just be more proud to show the portfolio.
Dude, I have a huge on for Amazon. Like, I think it's going to be one of the first $5 trillion companies. It's why it's in my top 5. And it's not just SoFi is in my top 5 too now. I mean, just to be blunt with you guys, it's a $40,000 position for me. It's way behind in terms of Palantir and Rocket Lab because they've been on a complete tear. But, you know, I've trimmed a lot of positions, and it's other than Amazon and Google, SoFi is number 5 if you don't include Bitcoin. So, another thing, I mean, if you trim half, you could still make $4,000 a month selling really far out of the money, $15 covered calls, and $4,000 a month is good money. So
I literally thought about doing that and then buying like another, with that money, buying about 2,000 shares or whatever it is. Because 35, so buying like 1,500 shares, getting to 5,000 shares. I'll put those covered calls on to get the rebate, and then I'll manage these for the next 3 to 5 to 10 years with Amazon, and hopefully eventually have a $350 price tag on those covered calls.
I'm in love with Amazon, man. I've been buying as much as I can, and every time I write covered calls on it, I buy another share or two. So I only have the ability to write 4 contracts. I don't have 4,000 shares or anything like that, but I do have 400, and I'm a lover of it. I think it's going to be a great returner. I think a lot of people undervalue it.
Stressed out a lot, guys. That like you guys that haven't been following my journey. This account was down almost $2 million at one point because I was fucking doing shit with companies like Hitex and PaySafe and Neo before I figured out how to make money on that ticker. Companies like BNGO, I mean SENS, I mean just the shit of the shit. You know what I mean? Yeah. So then I was like, okay, well, how about throwing in a Google in there for a change? Like doing something with companies that actually make money, not just a bunch of these story stocks. So I just feel like that was the maturation process that I had to go through, and now it's about trying to create a portfolio that can still give you some oversized returns potentially, but also you want to be able to sleep well at night. So I feel like if I move over 300, it's got to come from somewhere. I'm not saying that it has to come from SoFi right here, right now, but I do have it as a mission to get to 5,000 shares of Amazon, so that I feel like that part of the portfolio is rock freaking solid. You know what I mean?
Yeah. Yeah.
And then I still haven't quite built out the Tesla position because I got enamored with TSOL. I'm premium drunk on TSOL. The premiums are just too damn good. I've got a negative cost basis on TSOL. You know what I mean?
Wow.
And
No, that's a good point. I mean, I might meet you there. I mean, if you instead of you forego Amazon and you say, you know what, I need to do some Tesla. I mean, I've been thinking about the same, and that's what I might actually do with my Nvidia shares if they get called away. I'll start writing puts on Tesla because one, they're super fucking juicy. I mean, you look out for the January 200s, you're getting like 17 or 1800 bucks. That was 2 or 3 days ago. I don't know what it looks like now, but you think about it, it's like that's an 8% return just for sitting for 2 months and getting Tesla at 200. I'm not bullish on Tesla in the next 2 years, but in the next 5 to 10 years, I'm fucking bullish.
yeah.
You know what I mean? Optimus is going to be a killer. So anyway, I appreciate you sending the invite, Tevis. Maybe next time you can send it before the stream. I'm just fucking the event. But I do have to go. But it was great catching up with you.
Matt, I appreciate you taking the time and offering legit thoughts behind that. Man,
absolutely. If you have any other thoughts, man, just DM me and or message me on WhatsApp or something.
Appreciate you, brother.
Yeah, you guys rock. Thank you for having me on. Bye.
See you, man.
That was really insightful, man. I appreciate you guys because it's something that weighs heavy on me because again, there's a lot of people in the chat that don't know me. That's not even a fourth of the entire position of SoFi. So I'm only talking about trimming a little part in this portfolio. You know what I mean? So it's just like it's tough, man, because I have this idea of, you know, I could be known as that guy. This makes my mark, but at the same time, you know, you got to be responsible to a certain degree. It's just so it's like, I don't know, like another thing that I have in my journal is, and I know it sounds silly, you know, it sounds cliche because, you know, I have like the Wolf of Wall Street back there with the rules and whatnot, but my journal says, if Noto ain't selling, I ain't selling. That's what my journal says. So it's like, I don't know, because I mean, he's the biggest shareholder, right, at about 8 or 9 million shares. And he stands to make a lot. Well, I want to make a lot relative to my life. And because I've kind of like hitched my, what's it called? Hitched to that wagon. What did I?
Hitched your wagon?
Yeah, I've hitched I feel like I'm screwing up this cliche. I've hitched something to the wagon. I don't know. I fucking did something. I'm walking hand in hand with Noto and he doesn't know who I am. You know what I mean? Like we're in the ambulance together. He's the preferred customer, but I'm in there somehow. And we're going to the same spot. So I just feel like this dude is going to get his 300 mil. And if that means, you know, 10 or 15 mil over here, I'd be totally okay with that too. But he can afford not to get his bag. Does that make sense?
It's going to be really interesting, right? Because you have this.
Thank you, Wes. Thank you.
You have this date that's like exactly when they're.
No, bro. You're trusting. This isn't the reason I was willing to talk to y'all about it is because we know all this information, so it's not that cut and dry.
Yeah.
If it was on another company that didn't give us a freaking roadmap already, the question is, do you believe the roadmap?
Yeah,
right?
I mean, you know for a fact that management is going to try to get their bag, and they're going to do everything they possibly can by June of 2026 to make that happen, to pump their stock, and you can buy leaps for June of 2026.
Yeah.
That's a good point. He's not selling shares, but you have leaps.
Yeah.
So those do expire.
I'm not talking about selling shares unless they just get out of control and cover calls. But yeah, so another thing that I could do, I think that because I haven't been selling any calls against the majority of the position, right? Because there's only the 500 cover calls. I'm qualified to sell 2,400 cover calls on SoFi right now. Haven't done it because I'm like, well, let me just let it get to like 11, 12, 13. Then maybe that's something that if it was generating income, I'd be looking at this all different. And I think that's where maybe Dallas me having all these squatters is really what's making me uncomfortable, if that makes sense.
Let me throw up Tanner here, coming at us live from somewhere where his camera is not working.
Is my camera not working?
No, it's black.
Hide the hookers. Hide the hookers. There we go.
Can you see me?
Yeah, you're good.
There's the
All right,
freaking.
awesome.
There, we just
How
got
you
a
guys
lot
doing?
smarter. We just got a lot smarter. How's it going, Tanner?
Oh, come on. How's the audio and everything?
Good. Your internet's behind by like 5 seconds, but the rest is good.
Oh shit. Okay. What are we talking about?
We were talking about SoFi and the 2026 PSUs vesting and making money on options to line up with June 2026's. But what we're going to be talking about is Robinhood. Tanner, tell us. Where are you? This is not your usual setup.
No, I'm in Miami. I am going to the Robinhood Summit tomorrow, where they're going to be showing off some of the best active trader tools that anyone in the United States or UK could have, and I'm going to witness that, make some content, maybe talk to some very important people, and yeah.
So what he's saying is he's interviewing Vlad, is what he's saying.
Maybe others as well.
TJ, I don't know how you gleaned that from that very, very thick veil of nuance that Tanner just shared us with.
We'll have to see.
Yeah, he's interviewing Roy.
Roy's here, man. Roy's here.
Where is he? Bring him on camera. Are you
No,
guys
I mean,
sharing
he's
a
not.
room?
I swear to God, this is true. I had to sign no NDAs or anything. Roy supposedly is going through a different experience, and I cannot talk about it. I don't think I'm supposed to know what he... But anyway.
I guess we know who they like more.
Yeah, him.
That is awesome.
Did you just land, Tanner?
Dude, I've been traveling all day. Everything that possibly could have gone wrong went wrong. And the second I got in, I was like, okay, I just want to go live. So I asked Tevis, I was like, hey man, you want to go live? I just got in. And he's like, well, I'm already live. I was like, all right, cool. I just needed something to do. I was so unbelievably bored. And then like Bell, like my internet provider's fucking with me. My credit card, the second I get down here, I try to order an Uber and it declines. It says like they think it's fraud. I'm like, I don't know. Everything has just been not going well.
Yeah, man. It's Canada. Canada doesn't like it when you leave Canada. They just try to block all your shit.
It's stupid. I'm not having fun here. Not yet, but it's a nice place. Miami's beautiful, but I'm only seeing it at night right now. But hopefully tomorrow. And I also heard from a bunch of you guys, some people in the DMs that are going to be at this Robinhood Summit. So I'm excited to see all the, viewers and everything. I've never met a viewer in person or anything along those lines. So it'll be nice to meet Vlad, a fellow viewer. And,
You should just
potentially
stay
shake
in
his hand.
Miami until November 5th and vote for Trump.
Hey, Tanner.
Since
I don't think it works like that.
well, I know it doesn't work like that, but I mean, they're busting in migrants to vote for Kamala, so we gotta get some more for our side too.
Are you sure it doesn't work like that? I don't think they ask for ID or anything, Tanner. You can just slip in, man.
Just go to California, New York. They don't ask you for anything.
I'm going to fly over to California for that one extra vote for a country that isn't mine.
Hey, it'll affect your bags though.
It will. It absolutely will.
That's true.
For the good or for the bad, I'm not picking a side, but yeah.
How Canadian of you, Tanner? You don't do any any covered calls, right?
No, not yet.
Why don't you do any covered calls?
So I was gonna say, like, I got into those positions that I don't want to talk about just yet, that I told you about recently, but I'll be discussing that, soon. But that's different from direct covered calls.
But even if like even before that, like what was your rationale for not doing it?
A lot of it was just lack of knowledge, lack of tools, these sort of things. But yeah, I've been trying to learn more and more. And, I've had Steve on, I've had Roy or DDI, everyone but TJ, the actual goat of the whole thing. But yeah, trying to learn as much as I can.
According to Henry, he's the goat, but my account's at the.
Got you.
You've been posting that account more often now, TJ. You just been flexing on a daily. You're like, oh, casually just up 300K today, just up 200 today. It's been a great week so far. And you're like,
I'm working on my intro. When I hit 10, I'm gonna be like, everybody shut up, classes in second. I'll send a link to little nephew Henry to pop on the stream. No, I'm just talking shit, dude. He's really good at selling puts and calls. I steal a couple of his screenshots here and there. He got me into the American Airlines deal. Easy money there. But anyway, Tanner, how confident are you in the roadmap that SoFi's laid out? Because got a little predicament here that I had bought these, what I call lottery leaps on SoFi at $10 and 1,000 of them, and I'm up substantially on them already. So now I'm getting, like, I guess I'm second guessing, because on my journal it says if Noto ain't selling, I ain't selling. But then now I'm like, oh, do I trim half and all this other stuff? And now I'm just, I guess I'm letting the immediate gains kind of like cloud my judgment, or when I had a level head at them, and when I was buying the options, I had a level head and I had a thesis that I wanted to play out. And that was like, when Noto gets his bag, I want to get my bag, essentially. And now it's like I'm staring at I'm not a crazy gain, but I mean, it's a six-figure gain right now. If I just like take half off the table, maybe put that and shore up into like Amazon or something. So my mind's like playing tricks on me, like an old gangster rap song from this group called the Ghetto Boys that I don't know nothing about. So, well, I mean, I just feel like Noto is gonna deliver, bro. Like, I feel like the only time he's ever lied to us is when he said that we could sell options on the platform. That's the only time I feel like he legit lied to us.
I think that he at the time he wasn't lying. I think that they pushed it back, but I don't know. I'll never tell you what to do with your shares.
No, but I'm just saying, do you believe in the timeline? I'm not talking about what to do with the leaps. I'm saying how confident are you in that timeline? Because I feel like they've laid out this amazing roadmap, and depending on, you put 80 cents a share or $1 per share, etc. It could get pretty sick pretty quickly. Because what other companies done that to give you that type of guidance?
There's very few. I was actually talking about this today. There's very, very few banks that'll give you any long-term guidance, especially whenever you're talking about like Bank of America or JP Morgan or something like this, because they're so big, you might as well be making a macro call. Where SoFi is much different. They're more small, or they're much smaller. They can sort of navigate within the macro environment instead of, being the entire environment. But meaning, like, even if economies slow down, JP Morgan has no opportunity to grow within that market, in my opinion. SoFi does. But yeah, I definitely think SoFi hits their 2026 guidance. And in fact, I think they'll blow through it. This loan platform deal is exactly what I think that they're going to continue to write.
So
we're seeing these all the time.
I asked Tevis, and Tevis has an email, and he didn't even know what's going on, bro. He's totally not prepared for SoFi Weekly right now.
Yeah, I haven't read it yet. I haven't done my homework. Tanner, walk us through this deal.
Fortress, which is an investment group, took their money and some of their clients' money and said, hey, here's $2 billion. We want you to go look for loans, originate them for us, but use our capital, and we will pay you a premium to do so. So they can go about and like, for example, KBW, I think it was KBW, Timothy Switzer thinks there's going to be a 4% gain on sale margin because of this deal. 4%. Okay. Which means on $2 billion, that's an extra $80 million that they are going to make at potentially the highest margins of any other product that SoFi has ever sold at. So financial services, decently low. Lending, extremely high. Okay. Lending as a service, the highest.
Wait, sorry. They're taking Fortress's money and they're using it.
Finding customers.
Yeah. So how does SoFi keep the gain on sale margin though? Don't they just keep a commission?
Yeah, that is the sorry. I'm saying the word gain on sale margin just because it's the percentage that they're going to make on the total amount of originations. But yeah, it's a commission based on the total amount. So assume 4% on $2 billion. That's 80 million right there for that deal alone. Bang. Okay. What Fortress said is this is the start of a very long, partnership. So this is very, very consistent with SoFi's management. They don't talk about a lot of their lenders or a lot of their loan buyers, but a lot of the time it's the exact same company over and over and over that comes back to buy more SoFi loans. So if Fortress, a company with 48 billion under management right now, and that's not going to stay stagnant, they're also going to grow at, the market goes up 35%, they'll probably grow at a decent rate as well. And they are now wanting to diversify into new fixed income products. And one of those is personal loans. And so 2 billion this year, maybe 2 billion the next, maybe 6 billion the next. Who knows? Like there's a ton of growth here and it's all fee based, which means to the moon, baby. You can put a freaking, SaaS like multiple on that because that's straight commission and potentially recurring as well.
But that's not, they're not limited to just Fortress for that. They can have other people coming to them and doing similar deals with others.
100%. Fortress is not the first one that they're originating loans for. This is not the start of a new platform. They're already doing 90 million in this platform. It just might have been, a massive this could be a 30% increase on their loan business.
So why would Fortress come to SoFi as opposed to anybody else?
They went to other players as well. They went to Best Egg. Yeah. But it's, SoFi is an amazing originator for high quality loans.
Now, what's the timeline to get these 2 billion under contract?
We do not know.
Okay.
Yeah. I would assume it's 12 months.
So you're talking about 80 million, call it 60 to the bottom line, essentially, because of the high margins.
We don't know the terms of the deal. Okay. That was Timothy Switzer, a Wall Street analyst that knows a lot more about the lending, space than I do. And he thinks it's going to be an $80 million revenue opportunity, potentially $60+ million going to the bottom line.
I think the interesting
thing. What's the bottom line now? I'm sorry. What's the actual bottom line now?
So 60, let's imagine this happens. Let's imagine this happens over the next, 12 months or whatever. Yeah. So in 2020, well, the problem is let's say it just started in 2025, just so you can understand, let's keep it within one fiscal year. $65 million, $60 million, something like this is close to 6 cents of EPS.
Oh shit. Well, it's double. It's double right now.
Yeah. So 6-ish, maybe a little bit more of EPS. We don't know the contract. We don't know the terms of the deal. So they could be loss splitting with Fortress. They could be, at a 3% or 2% commission rate. But, there's so much we don't know. And one thing's for sure, Anthony Noto has never signed a deal where SoFi is anywhere near losing money, right? Like you've seen Dan Schulman or some of these guys actually put out deals like the Amazon Venmo deal, which might have actually been negatively impacting the business. And Anthony Noto has never done that. We are going to make our buck on this, right? Galileo could have been the partner for Cash App to own their cards. Anthony Noto doesn't want that. He's not looking for the big flashy names. He's looking for the big money. Okay. If Fortress came in, I believe it's going to be very profitable, but we'll know very, very soon. That we will know that on the earnings call. They'll tell us all the details. Guaranteed.
So the thing that I find interesting, Tanner, and this is because I'm hearing, getting to think about this news for the first time now, so this is somewhat raw, but from an analyst perspective, a lot of them over-index on the banking metrics for SoFi specifically and add zero or near zero to the tech platform or even to financial services by large extent. Members, God forbid. And so this is like, with the Fortress deal, this is SoFi essentially speaking their language, which would make those banking, like core banking metrics, look much better, the lending platform look much better, and lead to a whole bunch of upgrades.
Yeah. So the best way I can put it is, if you're a sheer lender, like just straight lending, you take the capital from your business, you leverage it to shit, which is good, right? But then you can only get so high. You have a capital ratio that is legally requiring you to slow down unless you add more to like your consolidated assets. Okay. So that whenever you're looking at this is interest income, can only grow so fast based on how much you can actually grow the business. And analysts, to understand how fast a company can grow, will focus on tangible book value. So if you're growing very fast, like your tangible book value is expanding, your business, your lending business is expanding, you put a 1.5 times tangible book value on that company. If you're not growing very fast, if it's sort of slow growth, then you go even lower, like a Bank of America, like a 1.1 times tangible book value. They're going to make slightly more than how much actual, how much the company's actually worth. But if you start looking into banks that do not have a lot of interest income and in fact actually make a lot of their money based on fee-based revenue, American Express, Adyen, Block, that have, tools way outside of banks, you would think, oh, well, Adyen's clearly not a bank. They're a payment provider, Amex, very similar thing. But those are full-fledged banks. They just make a crap ton of money through fee-based revenue. So their tangible book values can be 8 times, 5 times, 4 times, way higher than banks would normally trade at.
It's just a different type of multiple that just gets assigned to it at that point.
Because there's nothing holding back their growth rates anymore.
Understood.
Right?
That's cool. Because that just accelerates that hybrid multiple narrative, right? We thought the tech platform would essentially usher that hybrid multiple, and now it seems as though, this will make it even faster.
Yeah, exactly. This is the deal for the hybrid multiple. Like, this is fee-based revenue. Like in the actual statement that Anthony Noto put out, he even highlighted the fact that this is capital light and more fee-based revenue. Why did he say that? It was for the stock. It wasn't for the business. The people that actually care about the deal don't care about that. That was for investors. That's why he said that. So absolutely, this is for a hybrid multiple. So can I ask you guys just a question about this recording? It looks like my camera is just glitching out. Is that the case for you guys?
You pause a little bit here and there.
Okay.
Yeah.
Yeah, no quick movements.
Yeah. All right, sounds good.
Do you have to go, TJ, or was that Dallas?
Yeah. No, Dallas has to go. I got to leave in about 2 or 3 minutes. So, but anyway, Tanner, my man, looking forward to all the stuff coming out of Miami. You just asked Vlad, how big does the account have to get so that I can get an invite?
Dude,
I'm pretty sure Rico would hook me up real good, or Mumu. You do the Mumu link all the time, right? I'm just saying.
Mumu would have hooked you up. I'm surprised that you didn't get an invite.
Anyway, dude, I love the UI, dude. I can't. If they put out like legit shit that helps traders, things like Ivy rank, like show me my extrinsic value without having to calculate all that stuff. That way you're gonna have to go like to different places to do some charting. You can like legit do maybe like an overlay of like, hey, let me compare SoFi to a firm, see who's going better. Like there's just simple things that you can do on a lot of other platforms that you can't do on Robinhood yet. when SoFi comes correct, or when Robinhood comes correct with that, and if they ever start paying money, a little APY on cash secured put collateral, these legacy brokerages are in some serious trouble.
Yeah.
Like Robinhood becomes a top 3 position in the portfolio immediately, because it's game over for the other guys, bro. Because this thing's so easy to use. If you give me all of those other bells and whistles, man, I'm in.
I'm very interested to see what they show off. I mean, they've always put some level of an innovative spin on things.
For sure.
This app that comes out tomorrow, the desktop platform, whatever, I've got very high hopes. Yeah. And obviously investors do too. I mean, the stock just keeps pumping. So
yeah, I'm excited, man. I'm really thankful that Amit brought it to our little segment that we do on his channel. Shout out to Amit, because it's grown the top 10 position now, and it could potentially grow into a top 7 or 8 position here shortly. And
yeah,
y'all all talking about it when this damn thing was $7-8, man. And I was just hooked on the option chain. It sucked. So I was like, I can't do anything with these options. Well, there's a lot of money in capital appreciation too. You don't have to do much.
Tanner, just while we have PJ here, do you think from a stock price perspective, what do you make of the price action, as we head into earnings from now with the rally that we've had until earnings? I know, like, you don't have a magic ball, you're not Nostradamus, but like, what is your take essentially? Do you think we pull back? Do you think we break all-time highs? Do you think we zigzag? Like, where are you at?
Well, yeah, so I'm not Nostradamus, but I'll just give my opinion. So I feel like the stock has gone up more than I would have expected in this short period of time. But I mean, they just keep showing off, amazing things, and Q3 could accelerate. I don't know this 100% because it looks like September was not as strong as the other 2 months, but they could break 50% year-over-year growth rates in some like their assets under custody. Like if that's the case, which is the number one indicator for them actually bringing in, top line revenue here, like the stock has to be rewarded. Like they continue to accelerate growth, and then on top of that, like they're accelerating it past where they've accelerated it from previously. That puts in a massive multiple on a company. They have so many tailwinds, but I also think those will probably play out over long periods of time. Robinhood is not a 6-month play. This is a decade-long play. I was even thinking like going to this Robinhood summit. I'm not excited for Robinhood 2024. I told Tevis this. I'm excited for Robinhood 2026, Robinhood Summit 2027. Like, it's just great that they get the ball rolling, because now they have even more pressure to submit something for next year's convention, because they need to continue to bring this level of innovation every single year, almost like the Apple event. For a brokerage to do that, that's unheard of. Sorry, I'm going a little off topic. So in terms of the price, it's high, but I'm not selling a single share. I'm not adding a single share right now. But it's funny because this is a great lesson in not being first, but still being able to make money. I got into Robinhood at $17. Okay. Bought a little bit more whenever it went down to 16, bought a little bit more whenever it went back to 17, and then bought some whenever Tevis told me that he was buying during the yen carry trade. He actually ended up not buying any and made me buy because I was jealous that he got in at $14.
I bought SoFi instead at like $6.60 or something ridiculous like that, like on that same day with that same capital. So don't feel too bad.
Good. Okay. So, but whenever you look at, like I was talking to Amit, and he was like one of the first people that I told that I was buying, and he was buying in the, single digits, and I just couldn't see the thesis at all. And that completely broke after, I think it was Q4 of 2023. It was just unbelievable earnings. And I just couldn't, like, don't let your bias of having a problem with a company, turn a blind eye to making real money. You know what I mean? Like if Palantir comes out and shocks me, I'm going to buy Palantir. But for right now, I do not like the price of Palantir, and I'll hold that until I change my mind. But I'll be happy to change my mind if I think that I can make money there.
But the credit card business doesn't scare you just a little?
It scares me, but it's a little exciting as well. I don't think that it's as big of a deal right now. They got 85,000 cards. It's not going to make a big dent right now in its infancy. Talking to Vlad in his sort of complete assurance that they understand the underwriting thing makes me a little bit even more scared, because I understand from following a lot of these banks, it is incredibly hard to underwrite successfully. SoFi had an extremely hard time doing it on the credit card side. I don't know that Robinhood's going to be able to come in and solve it immediately, but I don't think that means that they can't.
Have you talked to him?
No, that was
I
from
know
the
you're a
last
law school, guys. I listen very closely.
No. Listen, that conversation was recorded. You can go and check my conversation with Vlad. I already did an interview with him, and we talk about his happiness with underwriting.
What are you going to ask him this time around, Tanner, that you didn't ask him? Like, what is your number one question that you want to ask him that you didn't get a chance to the first time around?
I want to talk to him about the products that he's releasing that day. So I don't really know what my questions are going to be. I haven't written a single thing down. I'm going to see what the products are like, and then I'm actually interviewing him. Oh shit. I suck, dude.
Dude, you can't keep a secret to save your life, dude.
We knew, Tanner. We knew.
I'm talking to him on my birthday, so
cool.
I'm pretty excited. It's going to be a pretty good, birthday gift to talk to him. That'll be a lot of fun.
And when is your birthday, Tanner?
That's on the 17th. So not tomorrow. He's going to do the whole keynote speech and everything. Yeah. And then the next day is more of a quieter period. A lot of, speeches and stuff like this. That's where I'm going to be, having my chance.
Right on. Awesome. Well, happy early birthday, brother. Appreciate you, everything you do for the SoFi research community and the fintech community in general. I built out pretty substantial positions on SoFi, PayPal, and Robinhood, and I mean, a lot of the research comes from you guys' channels. Like Bill White's in the chat. He's somebody from our community and y'all's community as well, and we talk about it often. We don't do any fucking research anymore on these companies. If you guys are covering them, y'all are saving us a lot of time. So, steak dinners on us whenever you guys ever see us, because we're legit. I mean, we make a shitload of money off of y'all's research as well. And obviously we have to push the buttons, but it does help when you don't have to read that article, because I know that you're going to be able to come over here and give me the information that I need, and that saves a lot of time, man. And so that is much appreciated. It is truly, truly much appreciated. I couldn't wrap my mind around this goodwill thing. I understand goodwill, but I was trying to understand the goodwill as it pertained to SoFi. And I sat down in front of Tevis and I'm like, dude, talk to me like I'm a child. What the hell's going on with the goodwill? Because everybody's freaking out about it. And in 5 minutes, I was crystal clear on it. Investment thesis intact. So I appreciate you guys. I got to run. I got to go do the husband thing to my beautiful wife. I have no idea how I'm married to that woman, dude. Y'all think that I'm excited about the portfolio. Fuck all that. I'm excited about that wife. That's the lottery over there, baby. I got to go. Appreciate you guys. Much love, man. Have a good one. Be safe out there, Tanner.
Thanks, TJ.
Thanks, TJ. I appreciate all the nice comments, man.
Take care, my guys. Appreciate you guys.
What are you thinking? You want to wrap there? You want to chat for a little bit more?
No, I want to wrap.
So we've been going on for 2.5 hours here. So I was hoping you would say that.
Yeah. I want to wrap. I want to go take a shower and everything. I'm freaking tired.
Well, enjoy yourself. It's going to be a crazy SoFi Weekly this week, I think, because I'm traveling and I'm going to be in a different time
I
zone.
think we genuinely have to reschedule it. I think both Roy and I are going to be on planes at that time. I was thinking about it. We were talking about like doing it in the hotel room. It's like I won't even be in the hotel. Like on the 18th, I'll be checked out.
Are we doing something tomorrow? Actually, hold on. Let me get off camera and then we can do this in the backstage. Thanks everybody for being here. 2.5 hours. We will see you next week maybe for Bootleg Weekly, but I'll be traveling for next little while. So stay tuned for updates on times. It's going to get a little wonky. Other than that, thanks. That common thing. You should go to bed, Tanner. And with that, he will. See everybody.
Bye, guys.